Good evening to my brilliant professor, Professor Philanver M. Tunog. A pleasant and wonderful day to you, sir, while you are watching my video recording. This is about conceptual framework and accounting standards, submitted by yours truly, Elena Biayanto BSE1, submitted to Philanver M. Tunog. Ideas analysis on conceptual frameworks and accounting standards. The conceptual framework for financial reporting is a set of principles that guide financial reporting. Both public and private companies use the framework around the world. The conceptual framework helps to promote consistent and comparable financial reporting across different countries. It also provides a common platform for preparers, auditors, and financial statement users to standard a company's balance sheet, income statement, and cash flows. An essential purpose of the framework is to assess various accounting standards boards in different countries and developing and revising individual accounting standards. Therefore, the concepts underpinning any specific standard should be generally be consistent with those outlined in the framework. The framework does not dictate how specific transaction and event should be accounted for. Instead, it guides the recognition, measurement, and disclosure of information and financial statements. So why do we need conceptual frameworks and accounting? Conceptual framework provides a structure for developing accounting standards, explaining fundamental accounting practices, and solving accounting disputes. Without a conceptual framework, it would be difficult to determine whether certain accounting practices are appropriate or not. The primary benefits of conceptual frameworks in accounting are provides a structure within which accounting standards can be made, evaluated, guides on how to measure and report economics events, helps to compare financial reporting of different companies, helps to resolve disputes about accounting treatments, provides a common language platform between accountants and user of financial account information, helps preparers to develop consistent accounting policies for areas that are not covered by an accounting standard, digital currency, or where there is a choice of accounting policy. What are the key differences between the framework and accounting standard? Conceptual frameworks and accounting standards serve different purposes. Conceptual framework lays the objective accounting principles and the harmonization of the accounting standards. Accounting standards, on the other hand, address the problem that needs to be solved, outline the treatment accounting, and disclosure of financial transaction. Rules versus guideline. Conceptual frameworks provide broad guidance of financial statement preparation, while accounting standards are more specific. Conceptual framework guides how to apply accounting principles to create meaningful and useful financial statement. On the other hand, an accounting standard is a specific rule or set of rules mandated with preparing financial statement. Flexibility. The conceptual framework is more flexible than the accounting standards. Accounting standards are rigid and promote consistency in accounting, which may be difficult in some circumstances. Transparency versus compliance. The conceptual framework promotes transparency and comparability in financial statements. At the same time, the accounting standards are intended to ensure accuracy and compliance. A conceptual framework does not override the provision of any specific accounting standards. In short, a conceptual framework is a broad set of guidelines that provides direction for financial statement preparation. Accounting standards are more specific rules that mandate how certain transactions should be reflected in financial statement. Thank you for your patiently watching my video recording.